Hi, it's Friday, March the 12th. This is Jim Sanger. We've got a little over 2 weeks. Right now, we got about 18, 19 days before the Federal Reserve is going to stop buying mortgage-backed securities. What happens when that occurs? Well, interest rates, as we've known them, the lowest interest rates we've ever experienced, are likely to rise. How much will they rise? Well, it's difficult to say. A lot of people indicate that they think that rates will go up anywhere from a half a point to a full percentage point. Some people indicate that rates could go as high as 2 to 3 points higher than where we're currently at over the course of the next 12 months. The only thing that really seems to be constant is that interest rates are going to go up something. So if you're looking to take advantage of the low interest rates and you're looking to buy a house, you might want to get busy. The other thing to remember is that the end of April marks the end of what's known as the federal tax credit for either first-time home buyers or move-up buyers. So get busy. Know it takes some time to buy a house. You don't want to miss out on the lowest rates that we've ever had. Now, if you still haven't refinanced, Credit Suisse was indicated in a Wall Street Journal article recently that 37%, over a third of all people that currently have a 30-year fixed-rate loan could lower their rate by over a full percentage point. Over half of everyone could lower their rate by 3/4 of a point or more, simply because they just haven't moved forward to take advantage of it. If you have any questions and want to see how that could benefit you, pick up the phone. Check it out. You're running out of time. When the Fed stops buying, we don't know what's going to take place. I can tell you that last year, first week of March, interest rates went up a full percentage point in less than 4 days. Less than 4 days. When investors left the building and didn't want to pick up mortgage-backed securities for a couple of days, it got ugly. I don't know that we're going to see that again, but you just simply don't know. Now, if you're out shopping for a house this weekend and you're trying to negotiate with the buyer, or you are the seller and you're trying to negotiate, one of the things you might want to keep in mind, as opposed to negotiating simply on the price, take a look at negotiating the interest rate for the buyer. Because the difference between a $410,000 mortgage and a $382,000 mortgage at the same payment is about a half a point. The cost for that right now is a little over 2 points in terms of discount points on the mortgage in order to make that happen. So keep that in mind when you're countering and you're negotiating. Don't always focus upon the price. Focus upon the interest rate and the other terms of the mortgage and the transaction to help you get what you want. If you have any questions, don't hesitate to give me a call. Fortunately, looks like the rain has stopped. Hopefully, you'll have a great weekend. Hope you have a great weekend. This is Jim Sanger. Thank you very much for checking in.